So it currently feels like the markets are bleeding and the world is literally on fire. But in this video, I want to go ahead and touch on how we may actually be on the verge of seeing some opportunity in the midst of all this chaos. And I want to go ahead and share this quote I recently saw, which is a snippet from Van Gogh saying, "The sea, it has its storms, it has its tides, and in its depths, it has its pearls too." Now, that's very synonymous with how you could actually view the markets, right? And of course, one other famous quote that you hear from Warren Buffett is that when others are fearful, make sure to be greedy. Now, of course, I'm paraphrasing, but I want to go ahead and touch on a bit of the chaos, and believe me, there is a ton of chaos, which is probably why hedge funds have increased their short positions last month by the largest amount since February 2021. Now, the first thing I want to go ahead and highlight is actually the 10-year treasury yield. See, we're actually seeing the 10-year treasury yield hit levels that we haven't seen since last year in April. And if we actually parse through to what the market did last year in April, we end up seeing that the market had a little bit of a drawdown, which of course makes sense because when treasury yields are higher, you tend to see stocks going down because of the equity risk premium that takes place. Of course, when yields are higher, that means it costs more to go ahead and actually borrow money, which is not good for companies, right? Because that ends up bleeding into corporate earnings. And so this is kind of just one area that we want to be mindful of. The fact that yields are kind of at these high levels that we haven't seen since April. But on top of that, we're also seeing the Dixie, the greenback, the US dollar kind of around these peaks that we recently saw. We're hitting new all-time highs on the dollar. And while many think that when the dollar is up, that's good, you have to look at it from a different perspective, because what that means is essentially that US products are a bit more expensive for foreign countries, and so they may end up actually buying less, and so that could also bleed into corporate earnings. See, of course, when US dollars are up, as a consumer, right, as a US citizen, well, then it makes sense to kind of start traveling, right, because then things elsewhere are much cheaper relative to the dollar. But we also have to kind of be mindful of the fact that when the dollar is up, well, you know, when there's this currency exchange, this conversion into US dollars, it makes it much difficult to go ahead and buy these products from, you know, American, just companies. Which, quick plug, is something that I mentioned recently in the Push and Profit private group, which, by the way, we have a massive sale taking place where you could join for just 20 cents a day, essentially. So make sure to check out that link in the description of this video, and I'll also leave it in the comment section down below. But with that said, we also have to touch on the California fires. Yes, it literally feels like the world is on fire, and the California fires are not something that we should just kind of brush off. And I actually want to share this post I saw on X, which kind of gives perspective to how bad the fires are. See, here we have the city of Manhattan, right? How large it is. And this is how big or how much impact is taking place in terms of the fires in California, right? It's a massive area, and so this is something that will obviously bleed into the markets as well. Now, if you're wondering, well, how will these fires impact the market, we have to think about the different sectors that are severely impacted. Number one, tourism, right? Tourists are not going to be coming or flocking to an area that's essentially just burning into crisp. And then also you have to think about retail spending. Think about all the brick and mortar locations, maybe all the Walmarts or, whatever Targets around those areas, right, that people are not going to be visiting, right? So that's going to severely impact a lot of those brick and mortar companies, which a lot of them are publicly traded companies. I mean, think about all the little CVS, Walgreens that might have been in that square area, right? Of course, we have to examine what specific companies were around there, but just think about it like this. Consumer spending for a lot of brick and mortar areas in that location is going to be diminished or demolished, really, because of the lack of people actually shopping when everyone has to evacuate. And of course, you have the insurance, right? Now, I know people have this bad taste of the insurance, especially since a lot of them have canceled recently, even before the fire, but we're not even talking about that. We're just simply talking about how insurances end up losing when they have to pay out, for these massive events, which I know is kind of interesting to think about, because the whole business for insurance is you pay for when scenarios like this take place. But if it's up to the insurances, they just want to pocket the money without actual natural disasters taking place. And so when these disasters take place, well, it definitely hurts the pockets of the insurances. And those are just 3 segments. I could go on for days, but this is something that we have to go ahead and continue watching. Hopefully, prayers to the families around those areas that everyone's able to evacuate safely. But this is gonna definitely bleed into the economy, especially because oftentimes when I talk about the market, we have to also understand that everything is interconnected. And that's why, although I'm not a big fan of talking about politics and geopolitics, it's not my favorite thing to really talk about and delve into, I still have to be aware about it, right? You can't understand what's going to go ahead and take place in the markets if you're not going to be, looking into what policies the next president is going to bring in and what is taking place around the world. You have to take all that into consideration to really analyze what's taking place in the markets. And right now, just domestically in the United States, it's looking pretty bad. Now, currently looking at the S&P 500, we're actually pretty range bound. Although we have seen some selling pressure, we actually haven't really broken down this area of support. And so that's an area that I'm going to be watching out for. Of course, if we break below it, then I'll go ahead and probably do a public video just updating where I think we may end up seeing the S&P 500 fall downward. So make sure to subscribe if you haven't done so already. I'll definitely provide an update for those within the Push and Profit private group, as I always do. But if we end up actually bouncing up that support, this chaos that we're seeing taking place in multiple different pockets may actually be another area of opportunity. Now, of course, it's too soon to really say, but we can definitely agree that the first week of 2025 hasn't been that pleasant with the market. But of course, if you guys want future market updates, make sure to hit that like button, subscribe to the channel, and I'll see you guys on this next video right over here. Take care, guys.